Saving money will make you rich? Think again. You probably have heard many online finance gurus talk about how essential it is to spend less than you earn and begin saving money. Now, I agree that you should save money and that you should keep your spending habits in check, but that's where I think you should stop listening to their advice. The most important thing that enabled me to build an 8-figure real estate portfolio was not saving money. I had to have money, but it was compound interest and leverage that allowed me to do that. And in today's video, I'm going to teach you why saving money is for suckers, what to invest in that's better than saving money, and most importantly, how the rich leverage compound interest to make billions. So what is compound interest and why have some of the greatest minds in the world been fascinated with it? Albert Einstein, one of the greatest minds of the modern era, famously said, compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it. You know, that's a very famous quote, but few people realize what it really says. Warren Buffett, the greatest investor of all time, has also said, "My wealth has come from a combination of living in America, some lucky genes, and compound interest." So if you want to make money, you need to get compound interest working in your favor. Conversely, you should never be paying compound interest if you want to be wealthy. So the greatest minds like Albert Einstein and Warren Buffett understand this, but do you? You must. There's something imperative about understanding this thing. So how do you avoid paying compound interest? Believe it or not, you are probably paying compound interest right now as we speak, just by saving money. Let me explain. If your money is currently in a savings account, you are losing money. That is because of inflation, which is something most of you guys might have noticed has increased dramatically in the last few years. The real rate of inflation can vary year by year, but the money supply has increased by an average of around 5% per year over the last 100 years. I mean, just think about it. The price of gas, the price of housing, the price of a pair of tennis shoes have all increased dramatically over time. Think back to your childhood, think back to your young adulthood, and remember what it cost to buy a pair of jeans. Let me put this in simple terms. If you have $100 today, you will need $105 next year to buy the same basket of goods and services. The year after that, if inflation rises another 5%, you will need $110.25 after 2 years of 5% inflation. So inflation does in fact compound. You need exponentially more money each year just to not lose money and keep up with the inflation rate. In 20 years, if the money supply continues expanding at a 5% average rate, you'll need $254 for every $100 you have today, just to keep up with 5% inflation. As the chart below shows you, the longer you don't act, the harder it will become to outperform this compounding inflation. Another way to visualize how dangerous saving money can be is through understanding the half-life of money, depending on the inflation rate. With the official global inflation averaging over 9%, your money is losing half of its value in 8.6 years. But some of you might be thinking, my money in the bank is earning me interest. Isn't that protecting me against inflation? Some people think that the interest rate that they are paid by their banks on their savings actually helps protect them against this. But you have to do some simple math. So let's run the numbers on this. Well, we can see today in the US that the average interest rate you'll receive from the big banks on your savings is somewhere around 3 to 4%. Let's assume you're lucky to find a bank that actually is paying you 4% on your savings. If you put $100 in the bank and you earn 4% each year, you will only have about $180 for every $100 you have today. And we don't have to go back very far to realize that just 3 years ago, you were getting 0.1%. The reality is banks continue to fluctuate what they're paying for interest because of how much inflation is happening and where interest rates are at. But even that's still not close to the $254 that you need to keep up with inflation if it's compounding at 5% a year. So you need to do something with your money. That's just simple math. And unless you want to become more poor, you need to solve that equation. Dollars continue to lose purchasing power, which means you need to spend those dollars on an asset that is going to increase in purchasing power. Remember when I said you shouldn't save money earlier on in this video? Well, maybe that's not entirely true. As soon as you have a little bit of savings, you need to invest that savings into something that outpaces the debasement rate of your money. One of the best performing assets over the last 5 decades that has actually outpaced the inflation rate has been real estate. And as soon as you save a little bit of money and enough to invest, you should begin investing in real estate if you want compounding interest working in your favor. Real estate is trusted. It's a secure asset that not only appreciates in value faster than inflation, but it also produces cash flow along the way. I can prove this to you over and over again with assets that we've purchased that have made us a ton of money because of the cash flow we've received and the appreciation that we've got at the end. This is what real estate investors do daily. This is why people own single-family homes, multifamily, duplexes, commercial buildings, because it outpaces inflation and it gives you cash flow. Experts are predicting that real estate will continue to grow and outperform inflation for many years. In fact, Grand View Research estimates that U.S. housing will continue to return an average growth rate of 5.2% compounded yearly until 2030. However, people like yourself are not here watching this video just to achieve average growth. You and I both want to outperform the market. Let's discuss a couple of my favorite places in the world to buy real estate. Nobody talks about Boise, Idaho, but it's one of the best performing real estate markets in America. The median home price in Boise increased from $130,000 in 2012 to around $460,000 today in 2023. That market has nearly tripled in 10 years. And talk about cash flow. Boise, Idaho has experienced great growth in rent prices over the last few years. We have achieved on our assets an average of 15% annual growth for the last 4 years. This is why I choose to invest in places just like Boise, Idaho. Another one of my favorite areas to invest in real estate is the great state of Texas. You know, I read something the other day that said that by 2070, Austin, Dallas, and Houston will be larger than New York, LA, and San Francisco. And Texas is experiencing a massive influx of people fleeing Democratic states like California, New York, and Illinois. You see it every night in the news. This has been seen as a surge in the vast majority of the Texas real estate markets. This is because Texas has some very promising things. 1, it's got a strong economy. 2, housing is fairly affordable. 3, it's got low taxes. 4, it's got good schools. And 5, it's got a warm climate. Prices in North Texas have more than doubled since 2012 alone. Average home prices in Texas have grown by over 250% in the last decade, with a majority of that growth coming in the last 5 years. As we see more people fleeing the Democratic states, places like Texas, as well as others that we will mention shortly, will continue to become an increasingly popular and sought-after area for migration. This will continue to fuel the growth of the real estate market in these areas. Now that you understand the concept of compound interest, I hope you've learned you must get compound interest working in your favor if you want to become wealthier. Another reason why I like investing in Texas is because the people in Texas don't suck. You absolutely must do something with your money. And I think buying property is one of the best things you can do with that money. Another smart thing to do with your money is buy assets that do not depreciate in value. Buy assets like gold, silver, things that hold value and in tough times actually become worth more money. It's as good a time as ever to start or continue growing your real estate portfolio. I've given you 2 of my favorite places to invest, but I also have many other hotspots I've uncovered in my 27 years of studying markets. If you want to find more real estate hotspots, I recently revealed my 5 favorite places I think you should invest into for 2024. If you want to watch the video I've recorded on this topic, I will put the link in my video right here. If you want to know more about real estate investing and how you can become a part of a team of like-minded real estate investors, you can visit my website at shannonrobnett.com. And if you've enjoyed this video, be sure to like and subscribe for more, and I will see you next time.